This is the Asia Trade. I'm Shery in Tokyo.
I'm April Hong in Singapore. The top stories this hour. Asian stocks set to follow Wall Street lower as doubts linger over the pace of Fed rate cuts ahead of a key U.S. inflation reading. South Korea to buy more than 100 Boeing jets, but President Trump refuses to reduce its tariff rate despite lobbying from President Lee Jae-myung at the White House. And Elon Musk seeks billions of dollars in damages over claims Apple is unfairly favoring OpenAI by integrating its products into the iPhone.
Take a look at how we're setting up for the market opens across Asia after two sessions of gains for Japanese stocks. Nikkei futures unchanged at the moment, but we saw the Japanese yen weaken in the overnight session against the U.S. dollar. We had a stronger U.S. dollar, but that still didn't stop the yuan, the offshore and onshore, both advancing in the previous session. We do have this rally in Chinese stocks at the moment. Of course, optimism over the artificial intelligence boom, not to mention more stimulus coming from the Chinese government. Of course, we saw Shanghai loosening those home buying rules, so we will be watching those developers that rallied in the previous session. But take a look at how the U.S. futures market is looking right now. Of course, we had that downside pressure coming in the overnight session, that excitement over Fed cuts to come in September really fading. We're seeing S&P futures slightly higher, 0.1%. We saw the dollar also gaining ground by the most in 3 weeks, together with Treasury yields. Crude prices under a little bit of pressure, but all of this, of course, on a very difficult week where we're also contending with NVIDIA results to come, not to mention the Fed's preferred gauge of inflation, the PCE numbers on Friday as well. And, of course, we continue to follow everything around geopolitics with the President Trump and E summit just wrapping up in D.C.
Yeah, that meeting between the leaders of South Korea and the U.S., we're hearing that Korean Airlines will buy more than 100 Boeing jets and sign an engine deal with GE Aerospace. And this is after President Trump met the South Korean leader Lee Jae-myung at the White House. They also agreed to cooperate on security issues and shipbuilding, but Trump refused to change the terms of South Korea's tariff agreement, despite lobbying from Lee.
We're going to be buying ships from South Korea, but we're also going to have them make ships here with our people, using our people. And we're going to go back into the shipbuilding business again.
Bloomberg Sam Kim joins us now from New York. So, Sam, what do we learn about perhaps the terms of their trade agreement that we didn't know before? And what exactly stood out to you from what Trump and Yi discussed?
Well, basically, there was some questions about the extent of the tariff deal that they had in July. For example, will South Korea open up its rice markets completely? And there was some concerns in the U.S. that South Korea might not do that. And, back home in South Korea, the officials were telling the local audience that they would not completely yield to U.S. pressure on rice markets. There are a lot of complications. There are a lot of things that just had to be worked out thoroughly in the summit between Lee and Trump today. And at the end of it, basically what Trump said was that, South Korea agreed to carry on with the deal as they had forged in July. And I just came from listening to an event that Lee was attending where he gave a speech and said that, the results of the agreement, the results of the talks that he had with Trump were very successful. So it seems like there's not much disagreement at the moment in terms of the trade deal between the two.
Sam, what about the investments? Did we get any more clarity on the investments that South Korea is making in the U.S.? We heard about Korean Air buying Boeing aircraft, but we had also been curious about the investments in shipbuilding, the investments in new technologies, just $350 billion plus of that capital going to the U.S.
Yeah, that's right. There's actually a lot of potential deals that could still be made between South Korea and the U.S. What Trump acknowledged in his summit with Lee was that there's a lot that the U.S. could benefit from South Korea in terms of manufacturing. I mean, as everyone is by now aware, the U.S. is trying to distance itself from the supply chain that is led by China, which means that it's going to need a new type of ally in terms of rebuilding its own manufacturing base. And that's where South Korea comes in. Trump sees South Korea as one of the partners that could help rebuild the shipbuilding industry, maybe possibly some of the aircraft buying from South Korea could help with trade revenues for the U.S. At the same time, there's U.S. troops stationed in South Korea, which means that the U.S. can see South Korea as a partner where it doesn't really have to worry about the national security concerns as it would have to with China. So there's, a lot of deals that could be made, including the potential Alaska LNG project where Trump is asking South Korea and Japan to take part in. So there's details that have to be worked out, in the month ahead, and this basically fosters the momentum for that.
So that's on ships, but what about chips and the semiconductor supply chains? We're hearing that the NVIDIA CEO had a meeting of sorts.
What I've seen is that NVIDIA's Jensen Huang basically attended this business meeting that was organized by South Korea, which also involved Samsung Electronics chief Jae-Hwa Lee, Hyundai Motors, Chung Il-sun. I also spotted SK Memory, SK Hynix, Choi Tae-won, who are the biggest business honchos out of South Korea, and Jensen Huang basically, rubbing shoulders with these executives alongside South Korean President Lee. These meetings don't necessarily mean that there are going to be immediate deals between these executives and the U.S. executives, but they basically help lay the ground for what could come in terms of chip production, chip cooperation, especially at a time when the U.S. is trying to bring a lot of the South Korean tech-oriented chip factories onto its own soil. So there's a lot happening, but it's too early to say that there are going to be specific deals forged, out of this summit, and it basically begins a process for more U.S.-South Korea technology cooperation.
Too early to say, Sam, as well, when it comes to a Kim Jong-un-Trump summit again?
Well, what we've heard from Lee's spokesperson just now is that when Lee met with Trump today, possibly during the lunchtime, Lee offered Trump that he could try to broker a summit between Trump and Kim Jong-un if Trump is, willing to come to the APEC meeting that will happen in late October in South Korea. What we've heard from the spokesperson is that Trump is really interested in coming to that meeting, but without him coming, there would be no summit, basically. Lee would really be interested in trying to arrange a summit with Kim Jong-un if Trump comes. So that's something that we'll have to keep an eye on. But I would imagine that Lee would also try to meet with Kim Jong-un alone first before any of that Trump summit happens. So there's potentially a lot of diplomatic activity that'll unfold in the month ahead.
This summit with President Trump was such high stakes for President Lee, right? Given South Korea's position as a big trading partner to China as well. Did we get any indications of where cooperation with the United States lies when it comes to really pushing back on more assertiveness coming from Beijing?
Well, that's a good question. Before the election that put Mr. Lee in power, he was somewhat seen as a politician who would be leaning toward more toward China, bringing South Korea a little further away from the U.S. I think the summit that happened today kind of relieved the U.S. of those concerns, in that he is really stressing, even as he's speaking at the CSIS event in Washington, he's telling the U.S. audience that he's going to stay in line with the U.S. supply chain policy on China, that he understands that the South Korea basically cannot get away from the U.S. regulations in terms of exports of technology products to China, that it'll stay in line with U.S. So it's quite interesting. It's quite a reversal in terms of how we've seen him in the past and how he's changing with his his stance on China. It may be still a little too early to tell that he's completely dropped his earlier stance on China, but you know, it's a sign. What we've seen today is a clear sign that he understands what the U.S. wants, and he understands that it'll be very difficult for South Korea to not go with the U.S. on China policies.
Sam, thank you so much. Talking all things the South Korean leader's visit to the U.S., Bloomberg, Sam Kim for us there. Now, in the meantime, we, of course, have been seeing in markets the U.S. equity rally stalling as valuations approach all-time highs. But it's a different story in China, where stock euphoria has taken hold. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. Garf, there's been a lot of comparison drawn to 2015, but you think this time is different?
Well, this time may not be different. If this time isn't different, then we're a long way short of the bubble levels at which it popped. So the rational move now might well be, from investors' point of view, to buy in, even if you do think a bubble is developing, because there's plenty of gains to be had before you would get worried. That being said, there are signs that it might well be different this time. In 2015, a big problem was that the levels of margin debt that were being taken on became very excessive very quickly, and that had everybody, worrying, sort of buying feverishly to keep that margin debt, in play. But also, when the bubble popped, everybody had to get out, and so you had a massive drawdown. We're not seeing that level of margin activity now. We are seeing, so far, a pretty healthy buy-in from domestic retail investors, and retail investors are very, very crucial for the Chinese market. It's very hard to have a sustained rally unless households are buying in. We also have signs over the last week or two with how the yuan and Chinese stocks are moving in the same direction, often within the day, that foreigners are coming back in. The famous China uninvestable moment caused a lot of angst and definitely acted as a restraint for rallies. That seems to be coming away. The government is acting supportive. The campaign that Xi Jinping has led to try and stop overly competitive pricing, as they call it, which compresses margins, that's having an impact, and in particular, it's sort of something that's seen as, I think, a more business-friendly interference in the market than some of the previous moves into the market that Xi Jinping and his government have made. So all of those are acting, and valuations are well below long-run peaks. So there's lots of room to go, and there is some optimism that China, A, the Chinese economy is turning around, and B, the government is willing to step in again if that turnaround loses momentum.
Garfield, what happened overnight in Wall Street? I mean, this huge reversal from the euphoria that we saw post-Jackson Hole also felt across global bond markets as well.
Well, when it comes to equities, they've still got NVIDIA coming. There's also there's a bit of a tightrope moment in that the Fed is going to resume interest rate cuts. The market welcomes that, but there is also the corollary that is the Fed going to resume interest rate cuts because the economy is turning over nastily? So that's the concern. Rate cuts can be good for stocks unless they are coming in response to a 2008 style event where ultimately the rate cuts helped stocks recover from the bottom, but the bottom was a very long way down. So that has to be a concern. We've also got NVIDIA coming after a couple of weeks of angst about whether the AI boom may be heading for a plateau. So all of that, I think, is making equity investors reluctant to pile right in. There was also the reminder from France, which it's worth, the French turmoil sent French assets lower, including stocks. So that's a reminder that political turmoil can hurt stocks. And for bonds, sight of French bond yields jumping back significantly above Germany's and potentially going back above Italy's, that adds the concern about the long end in particular for U.S. bonds, for U.S. treasuries. So the steepening play is very much the flavour of the week, and short end yields are going to be are going to be held down, but long end yields, there's dangers there.
I guess political concerns never far away from the minds of investors. Garth, thank you so much. Garfield Reynolds for us, who leads our Markets Live Asia coverage. More ahead on the Asia trade. This is Bloomberg.
President Trump still refusing to change the terms of South Korea's tariff agreement despite lobbying from President Lee Jae-myung during the first in-person meeting. For more, Troy Stangarone, non-resident fellow at Carnegie Mellon Institute for Strategy and Technology, joins us now. Great to have you with us. I mean, this was very high stakes for President Lee. How well did he do?
I think he did well. It was clear if you watched the press briefing that he did his homework. He knew how to approach President Trump. He didn't necessarily come out of this with everything he'd wanted, which would have been an adjustment to the trade deal. But I think the primary objective coming in was to make sure that the economic relationship is stabilized, that there isn't going to be any uncertainty going forward. And I think he ultimately achieved that we have some stability on the economic side now.
A lot of these conversations with President Trump is always about managing the president himself, right? What sort of new cooperation can we expect from the two sides given this first summit?
So it's clear that there's going to be cooperation on shipbuilding. And I think it's actually somewhat interesting that President Trump said that he is looking into purchasing U.S. ships. That means that he will either need to give a presidential waiver to the Vine-Tollefson Amendment, which prohibits the U.S. from buying military ships abroad, or seek a change in the Jones Act to buy commercial ships from South Korea. But if we do move forward in this manner, there's going to be a good chance that the Make America Shipbuilding Great Again, that this would actually be a two-way street rather than one-way street. And I think from a South Korean perspective, that would be important to know that this is going to be about more than simply investing in U.S. shipyards, U.S. supply chains, and training U.S. workers, but that there's actually going to be a benefit that comes back to South Korea. Beyond that, we saw the deal announced between Korean Air and Boeing. I would expect over time we'll probably see things come out on the semiconductor side. Samsung had been looking to perhaps do some more investment in advance of the summit. I think there's room for SK Hynix to invest more in the U.S., and that's probably something NVIDIA would be looking towards, especially with its TSMC production now in Arizona. And at the same time, there had been some talk just beforehand, and I think there's a lot of logic to cooperation on the development of nuclear power plants, specifically those built by South Korean firms in conjunction with Westinghouse in the United States.
Troy, the other thing is how the U.S. seemed keen to have some progress on North Korea. But what is your assessment of, at this stage, is it really up to South Korea, though? Because we've seen how peace overtures from Seoul earlier in the year, they were kind of rebuffed.
Yeah, if we look at the situation right now, President Trump likes to talk about whether you have the cards or not. And it doesn't look like either the United States or South Korea have the cards to arrange a meeting with Kim Jong-un anytime soon. Kim Jong-un has a very productive relationship right now with Vladimir Putin in Russia. Depending on the estimates, you're talking anywhere between $5 to $20 billion in value he's gotten from sending troops and weapons and other things to Russia. In return, there have been air defense systems come back, help on ballistic missiles. There's suspicions that Russia is helping them build nuclear subs. So we have a lot of cooperation going on right now between Russia and North Korea. And so there's very little incentive for Kim Jong-un to meet with President Trump or Lee Jae-myung, because at the end of the day, what they want to talk about is the nuclear weapons. And even if they take that off the table, it's unclear what an agenda for North Korea would look like with the United States or South Korea, because even if it's not denuclearization, they still want to cap the programs. And that's not really something North Korea is interested in right now.
Troy, to what extent are we likely to see an improvement in Japan-South Korea relations potentially?
I think this was actually very positive. President Yi went to Tokyo and met with Prime Minister Shiba before coming to Washington. He did that both symbolically to show that he is committed to the relationship with Japan and that he's committed to trilateral relations. But I think it's also something to where there is a unstated but tacit recognition that Tokyo and Seoul need to coordinate more in this current geopolitical environment, and that, as President Yi said, that doesn't mean we forget about the history issues, but that we have to take and work together where we have common interests on security, where we have common interests on economic issues, where in the case of Korea and Japan, they clearly have common interests in dealing with demographic issues. And so I think creating that space to have a relationship to where you can move forward in productive ways, but that you don't take and simply forget about the historical side. If they're able to take and build that going forward, I think we could see a very productive Korea-Japan relationship in the future.
I didn't see much from this summit when it came to U.S. troops in South Korea, whether reductions or repurposing. Is that a win for President Yi?
I think that's definitely a win. It doesn't mean, President Trump in his press conference said he didn't want to talk about this now. So this could simply mean that the U.S. doesn't know how it wants to proceed. But from a practical standpoint, we really need to look at this in terms of capabilities. What are the capabilities you need on the Korean Peninsula in terms of personnel, in terms of materiel? And what is the threat assessment? And so the threat assessment with North Korea clearly has changed, both from President Trump's first term to now because of the relationship with Russia. And so I think getting that right and doing that, not as a U.S. taking and trying to impose on South Korea either troop reductions or something else, but jointly looking at that security environment. And to be honest, looking at the demographics of both countries, South Korea is going to face demographic challenges over the next decade. Because of U.S. immigration policy, the U.S. is not going to age as fast as South Korea, but it's going to age faster than it would have in the absence of those policies. So looking at what you need and how you structure that, I think is important, but that's not a conversation for right now.
All right, the conversation sort of continues against this backdrop. Troy, thank you so much for your analysis. Troy Stangarone is non-resident fellow at the Carnegie Mellon Institute for Strategy and Technology. More ahead on the Asia trade. This is Bloomberg.
Take a look at how U.S. futures are trading after we saw a session of losses in the overnight session. That euphoria around the Fed rate cuts, expectations easing a little bit. We heard from the Federal Reserve Bank of New York President John Williams saying that the U.S. economy's neutral rate may not be much different than before the pandemic, that global demographic and productivity growth trends that push the neutral rate down have not necessarily reversed. Of course, we are headed towards a PCE, Fed's preferred gauge of inflation data, later in the week. We also have NVIDIA reports on Wednesday. This is Bloomberg. We're counting down to SpaceX poised to launch another critical test flight of its massive Starship rocket. We're about 30 minutes away. Remember, it was already delayed from yesterday as well because of a liquid oxygen leak. Starship is now set to take off from SpaceX's South Texas launch facility Starbase. The mission would be the rocket's 10th major test flight. And April, of course, heightened stakes here, given that we've had a series of setbacks this year, including the first two flights blowing up within minutes. A third failed to deploy dummy satellites and then spun out of control. So we'll be watching and bringing you live coverage in about half an hour of this next critical test flight of the Starship rocket.
High stakes as well because of the resources that Elon Musk has channeled into making this launch a success, from the Falcon 9 program into the Starship program. And we also know how this rocket, once it's launched eventually, hopefully in the next half hour or so, it's set for a controlled splashdown in the Indian Ocean. For more, let's bring in our business or space reporter, Bruce Einhorn. So, Bruce, a bit of a delay that we are hearing about. But also, I mean, I wonder if we could get your sense of what we're watching out for in the next half hour or so.
I'm sorry, I'm having some technical problems here.
Right.
Okay, I apologize. It's okay now. So yeah, I'm sorry. We're looking at this launch, as you mentioned. It's a major one because they've had a series of setbacks, and so a lot is riding on this. Starship is the biggest rocket ever made. SpaceX is a leader in the rocket launch business with the Falcon 9. A lot of other companies are trying to develop rockets that could compete with the Falcon 9 that are comparable in size. SpaceX, meanwhile, is now moving ahead to an even bigger size rocket. This is also really critical for Elon Musk's plans to eventually go to Mars.
How much do you expect SpaceX to have learned from the previous missteps this year?
It's a good question. They have devoted a lot more resources to Starship. Following the setbacks. This also it comes after Elon Musk's big falling out with President Donald Trump. Recall that for an earlier launch of Starship back before the inauguration, in fact, then President-elect Trump went to visit it, be there at the site with Musk. Obviously, things have changed a lot since then. So a lot is riding on this, both in terms of where SpaceX is going as a company and where Musk is going in terms of where he wants to go for his visions for traveling to Mars. And just reestablishing his SpaceX's dominant role in this industry.
I was going to ask, because it does seem like these costs are really piling up for one of the world's most valuable private companies. Is it a case of just being all in from Elon Musk?
Well, I mean, I think it's also important to remember that this is a company that really does still have a dominant role in the space industry. There is no other company that comes close to SpaceX when it comes to launching satellites into orbit. No company comes close to SpaceX when it comes to operating internet satellite communications network, Starlink, in low Earth orbit. There are other companies that are trying to catch up. But SpaceX is well ahead of all of them. Starship represents just another step forward for them, trying to just make an even bigger rocket that's really important, not just for Mars, but also for American plans for the moon.
Is there optimism about the long-term future why investors keep pouring money into this company?
Well, it does have a really dominant position. There is no company that comes close to them. And so for investors who want to make a bet on the space economy, for many of them, SpaceX does seem like the right way to go. And they have had problems, but they had problems when they launched the Falcon series years ago. And they resolved them, and so there are investors who are optimistic that something similar will happen this time. Also, keep in mind, SpaceX is the leader in pioneering reusable rocket technology. They use for the Falcon series, they reuse the booster stage of the rocket. With Starship, they're reusing it as well. They do want to eventually get to full reusability. Other companies aren't there yet. Other companies would like to get there, but nobody is close to SpaceX when it comes to consistently reusing rockets.
Yeah, SpaceX also planning that stock sale that could value the company at about $400 billion. Our business and space reporter Bruce Einhorn, who will join us again once we actually get this rocket launch going. But Elon Musk, on the other hand, suing Apple and OpenAI, accusing the two companies of thwarting competition for other chatbot makers. Musk's X and XAI are seeking billions of dollars in damages. Let's bring in our Asia tech correspondent Annabelle Drulers. Bell, what do we know so far?
Yeah, well, just to sort of set some context here, Shery. So, for many people are probably familiar, but Apple and OpenAI, of course, ChatGPT, it is the most downloaded free app, iPhone app rather, in the US. They do have a partnership because Apple has been slow to roll out its Apple Intelligence, so it's turned to external third parties. ChatGPT or OpenAI is their choice, and so they're integrating that system into their latest iPhones. Now, the complaint that Elon Musk has is that decision of integrating OpenAI into the iPhone's operating system is something that inhibits rivalry and also innovation within the AI industry, and it also harms consumers by depriving them of choice. That's the argument that he's making. And so Elon Musk, which of course he has XAI, but they're now housing the Grok AI team, for instance. There's the X social network as well. They're saying that Apple is making it impossible for anyone other than OpenAI's ChatGPT to reach the top of the Apple Store charts. And so he's seeking billions of dollars in damages for this. And that lawsuit was filed Monday in a federal court in Fort Worth in Texas.
Belle, that's really good context. Have we had any response, though, in the meantime, from Apple or OpenAI?
So we haven't had any response from Apple so far, but ChatGPT, or OpenAI rather, did put out a statement, and they're saying that this latest filing, I'm just going to quote here, is consistent with Mr. Musk's ongoing pattern of harassment in response to the lawsuit. So that's what they're saying there, is that essentially we know that Elon Musk and Sam Altman, the CEO of OpenAI, have a very long-running feud. It dates back to disagreements that led to their split after the two founded OpenAI together a decade ago. And so essentially they're saying that it's sort of like that consistent pattern. It is interesting, though, to draw parallels because some of the allegations that Elon Musk is making actually seem quite similar to the DOJ's own case that it's pursuing against Apple. The US, of course, is looking to sue Apple in a New Jersey federal court, and that was filed back in March of 2023. But they're also saying that Apple has monopolized the smartphone market by blocking rivals from accessing hardware and software features on its popular devices. So some parallels there, I guess, between other lawsuits that are going on. But yes, that has been the response so far from OpenAI. As I said, nothing yet from Apple.
And before we let you go, Annabelle, Malaysia has just unveiled its own AI processor. How significant is this?
Yeah, it is fairly significant in terms of Malaysia's overall goals, because Malaysia is looking to boost its prowess in chip design, wafer fabrication, AI data centers. So this latest unveiling came on Monday. It's a local designer Sky chip. They've introduced what's called the Mars 1000 at an industry event, but this is the first AI edge processor in the country. So that's a component that essentially powers devices from within. You're talking about cars, you're talking about robots. We often talk about this so-called move to the edge, which has been a little bit slow, but this component would be key for that. So, as I said, Malaysia is looking to play a bigger role in the semiconductor manufacturing supply chain, also move up it as well. They already have AI data centers, for instance, big investments from companies like Oracle, Microsoft. Yes, this chip is sort of less powerful, of course, than what we see from NVIDIA. It's not so much state-of-the-art, but it is still an important step toward that overall goal. Unclear, though, where Skychip is planning to manufacture their designs right now. But, again, something that was announced at an industry event yesterday in Malaysia.
Annabelle Jewelers there with the latest. Other stories that we're following at the moment. Indonesian police have fired tear gas and water cannons to disperse protests in Jakarta. Public anger has been growing over a new housing allowance for Indonesian lawmakers, which amounts to almost 10 times the minimum wage in Jakarta. Demonstrators called for President Prabowo Subianto and other leaders to step down. President Trump says Vladimir Putin's personal dislike of Ukraine's Volodymyr Zelensky stalling a meeting between the two leaders. The White House has previously said it believed Putin agreed to a meeting with the Ukrainian president and that planning was underway. But the Kremlin never confirmed their commitment, and no summit has yet been scheduled.
That was not easy for him to go to Alaska, for him to come here. But the fact that he showed up on a very successful day, it was a very successful day for other things, because we're also talking about missiles, nuclear. We're talking about a lot of different things. We're talking about limiting nuclear weapons. We'll get China into that.
Israel is offering to reduce its troops in Lebanon if the government disarms Hezbollah by year's end. It follows plans by Beirut to demilitarize the Lebanese militia. Israel agreed to a U.S. brokered ceasefire deal with Hezbollah last year, including the withdrawal of troops if the militia is disarmed. Take a look at how commodities are trading. We had seen oil sort of stabilize after 4 sessions of gains. Of course, we're still waiting on clear signals over crude supplies, but with the U.S. poised to double a tariff on all Indian imports to penalize the country for buying Russian crude, we continue to watch for any fluctuations in the price of oil. We're watching iron ore as well. We actually had Beijing, the Chinese government in Shanghai, easing home buying rules. So we saw Chinese developers rallying, and of course we will be watching that demand for iron ore given the property sector in China. Also, gold is now wavering a little bit. Traders weighing the Fed rate path. It has seen a little bit of a boost in the previous session given expectations of that monetary cut coming from the Fed in September, April.
Yeah, against those expectations, or the environment of the Fed's rate path, what we've been seeing doing quite well still, cryptos, right? We saw Bitcoin taking a bit of a breather on Monday. It's still at the 110 level. And if you look at this chart, it has fallen below the 100-day moving average. But the sense you get is that it could find support at the 100,000 level. Now, it's not just about these technical levels we're seeing on crypto. There's also deal making, investment potential underway. We are hearing that we could see a number of firms, including Galaxy Digital, raise about $1 billion to accumulate Solana. And if this is the case, it will be the largest treasury dedicated to the digital token. Solana, though, is still seeing a bit of softness, ticking up and reversing at the moment. More ahead on the Asia trade. This is Bloomberg. And we have some earnings as well out of Australian iron ore miner Fortescue. It's reported a 41% drop in full-year net profit against a backdrop of sluggish Chinese steel demand and falling iron prices. Bloomberg's Paul Allen joins us now with more. Paul, what were the key takeaways?
Yeah, well, as you say there, big drop in net profit, 3.37 billion was the headline number there. And we saw a similar drop in dividend as well, 39 US cents equivalent per share. And that's about a 30% drop as well, and the smallest dividend since 2018. But Fortescue did see record annual iron ore shipments during the period, up 4%. Production costs were lower as well, but it couldn't offset the drag from weak Chinese demand and lower iron ore prices as well. And Fortescue, of course, is a pure play iron ore company. Its biggest customer by far is China as well, although it has been seeking to diversify recently into energy, specifically hydrogen, which would help create a value-added iron ore product. Now, that's been expensive, and over the past 4 years, Fortescue spent about $3 billion on this and not really seen any return so far. And back in July, flagged it was taking a $150 million write-down on stalled projects as well. But Fortescue doubling down, the energy CEO, Gus Pichot, saying green energy, green hydrogen remain key to our future. Fortescue shares up about 9% on year. It'll be interesting to see how the market reacts to this at the open at the top of the hour.
Paul, and we're also getting towards the end of earnings season in Australia. How's it looking?
Yeah, and Fortescue is going to be a bit of a case study in this because results have come in pretty much in line with expectations, but the expectations of the market have been pretty high, and any company that's come up even a little bit short has tended to get punished pretty badly when it comes to price reaction and analyst reaction as well. I mean, if we take a look at the biggest stock on the ASX index, that's Commonwealth Bank. You know, its cash profit met expectations, but analysts weren't convinced by the outlook, especially in an environment of falling interest rates. So that stock got hammered pretty hard. It was down 6% on the day. That was a couple of weeks back, and it's still down about 4% from there. and other misses have been punished similarly badly. We saw another market darling, the pharmaceutical giant CSL, hit pretty hard last week, seeing its steepest ever share drop after one of its units underperformed. Same story for the burrito maker Goodman and Gomez, also the building products manufacturer James Haidi. All have seen analysts rush to cut their price targets, and the share prices suffered as well. The ASX is at record highs at the moment, trading at 20 times forward earnings, so it is expensive, getting hard to justify those prices. We're getting near to the end of earnings season now, though, but still a few big names to come, like Wesfarmers and Qantas. But yeah, it's been tough persuading the market about some of these valuations.
Bloomberg's Paul Allen there with the latest on the earnings season in Australia. Now, we're watching China as well. President Trump saying that he will probably visit Beijing this year or shortly after. The president says the U.S. will have a great relationship with China. Trump spoke about China during a meeting with South Korean President Lee Jae-myung at the White House. He also expressed his interest in visiting China alongside with President Trump. Of course, we continue to see the incredible rally in the Chinese equity market. We are talking about Chinese stocks now jumping again on Monday. Turnover on Shanghai and Shenzhen exchanges reaching a combined $433 billion, the second highest on record. Investors really betting that the rally has room to run. Of course, we see capital rotating into equities, optimism about DeepSeek, and also expectations that we might see more stimulus coming from China. In fact, we have seen Shanghai easing home buying rules and shares of Chinese developers rallying in the previous session. We're also watching the earnings season in China. PDD's U.S.-listed shares closing higher after better-than-expected second-quarter results. This as China ramped up stimulus to galvanize consumers and to offset the economic fallout from U.S. tariffs. Let's cross over to Beijing and our China correspondent, Min Lo. Min, what were the key takeaways from PDD?
Yes, Shery, PDD's earnings was not too bad. Its revenue was up 7%. Net income slipped by 4%, but that is still beating estimates because there had been widespread expectations that this company was going to be hammered by the closure of that loophole, the de minimis loophole, which it relied on heavily to send small parcels to the U.S. And for now, it seems like the performance shows the company is pretty nimble and resilient in adjusting to that. It has managed to cut its operating expenses, especially when it comes to the marketing, reducing ads targeting the U.S. market, and it's trying to expand into other markets outside of the U.S., although some challenges remain when it comes to regulatory scrutiny because the governments of Japan and Latin America as well, those governments are also considering whether or not to tighten their own loopholes when it comes to small parcels taxes. But at the same time, domestically, it's supported by those government subsidies, right, especially for home appliances, for electronics, but still, it's facing intense competition from the likes of Alibaba, JD.com, a lot of price competition going in. But still, our Bloomberg intelligence analyst is saying that this company could still see revenue growth of about 10% or so through 2027 as it looks to expand into other markets. And in the meantime, it might see some margin gains as it attracts more shoppers and merchants.
Yeah, and we'll watch to see how those similar themes sort of play out on Alibaba earnings as well. That also reports this week. It's set to be a busy week for earnings in Asia, the busiest week this season. What will investors be watching for?
Yes, we have about a quarter of the companies in the Asia-Pacific benchmark, the MXAP, reporting this week. And yes, a lot of big heavyweights, right, including the Bank of China, BYD, among others, will be looking out for whether corporate profits, especially for these Chinese companies, start to strengthen, because that would give confidence for this amazing rally that we're seeing in China to continue broadening out or staying on, enduring for a while. At the same time, we're looking out for some new materials, basic materials, energy companies that are plagued by this overcapacity problem, given the country's anti-involution push, whether they see any impact on their earnings or not. But I just want to quickly run through a couple of big earnings that we got yesterday as well. We had Haidi reporting that missed estimates when it comes to net income in the first half, slipping by about 14%. And that shows you that Chinese consumers are still holding back spending, especially when it comes to dining out at these premium establishments like Haidi. That's where we are seeing a little bit of softness there. the competition when it comes to those food delivery platforms, that perhaps also kept people out of dining out in restaurants as well. We also have Lux Share Precision meeting their first half net income estimates, supported by the recovery in Apple sales as well as strong EV demand in China.
Bloomberg China correspondent Mimi Lo there. As we head towards the China market opens, we'll also be watching Japan when it opens at the top of the hour. We're getting the services PPI numbers, growth of 2.9% year-on-year, coming in below economists' expectations, also slowing down for a second consecutive month for the month of July. Of course, key will be the Tokyo CPI numbers coming out later in the week as well. More ahead. This is Bloomberg. Take a look at some of the stocks that we'll be watching at the market opens in Korea. Track Korean Air after it announced plans to buy 103 aircraft from Boeing. Shipbuilders also in focus after the U.S. pledged to purchase Korean ships. Hyundai also watched the stock after it raised investment in the U.S. to $26 billion. Over in Japan, Track Refiner stocks after Reuters reported the Canadian province of Alberta is considering investing in the country's refining sector. Now, over in Australia is towards the end of the earnings season. Track shares of Fortescue after they reported earnings. Coles Group also. Keep an eye on Goodman Group. The Financial Review reporting that Singapore Sovereign Wealth Fund is preparing a proposal to invest in the company's data center assets. Market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg.
We do still have the ability to then recycle the count under certain conditions back to T-minus 40 seconds and hold there to assess what happened. And if we can...
Surprised it's hot in South Texas.
We're counting down to SpaceX launching its test flight of its Starship rocket. Of course, this was already delayed from yesterday due to a liquid oxygen leak. We are now headed towards that rocket launch, the 10th major test flight for SpaceX. You're watching live pictures out of SpaceX's South Texas launch facility, Starbase. Now, this rocket is supposed to be the most powerful ever built. Starship meant to fulfill Musk's dream of starting a human settlement on Mars. Is supposed to be fully reusable, eventually replacing SpaceX's Falcon 9 rocket. For this mission, SpaceX doesn't necessarily plan to catch the super heavy booster. That would be the lower portion of the rocket that lifts Starship into space. With this mission, SpaceX really trying to test its ability to undertake maneuvers mid-flight before super heavy attempts at controlled landing offshore. So we'll try to bring you that landing live as well. But the countdown clock right there, as you can see, has been stopped at 40 seconds. So we continue to watch for this rocket launch to happen, April. But at the moment, we know that the countdown clock has been stopped. And already we had seen lots of delays and even failures in the past with these test flights this year as well.
Not actively.
Yeah, absolutely. I mean, we saw 2 flights this year that blew up within minutes, and then another one that actually spun out of control. So you got to wonder how this launch and so much riding on it can actually help to fulfill some of Elon Musk's aims, which include eventually, population on Mars. And to your point about what's at stake with this launch, we have seen him reassign engineers from the Falcon 9 program into this Starship launch, which, as you say, is set for liftoff from the South Texas facility, and they're hoping for a controlled splashdown in the Indian Ocean, Shery.
So, April, we're now hearing that perhaps this launch is again delayed because of the weather. Let's actually discuss what's happening with our Business of Space reporter, Bruce Einhorn. Bruce, can you walk us through what's happening right now?
Well, as you just said, the countdown has stopped at 40 seconds. It seems like there are more complications. There are problems with the weather. Actually, now, from what I can see, it looks like the countdown is starting again. So it looks like maybe we're moving ahead. It's at 30 seconds now. So let's see. It does seem
What
like
are we
we
expecting from the launch today?
Well, we're expecting to see if they're able to make some progress after, as you pointed out, repeated disappointments. So a lot is riding on whether this one actually can have a much better ending. But now they're saying they're back to T-minus 40. So you probably can hear more than I in terms of what the status is. But looks like maybe things are paused again.
Bruce, we're since hearing that the SpaceX launch of the Starship has once again been delayed. This is, of course, after yesterday's delay and then for another half hour. And SpaceX, I think, is citing unfavorable weather for this launch. I mean, what does this tell us about SpaceX's ambitions overall? How much of a setback is this?
Well, it tells us that the weather was bad. I don't think we can read too much more into it than that. This happens when they try to launch things. Sometimes you just don't get the weather. I don't want to speculate beyond that about what this might mean. We have no reason to think it's anything other than just the weather.
Go for launch.
So obviously,
okay, Bruce, can I just get
what
your
happened
thoughts
yesterday
as well
with that
on
oxygen leak?
as soon as it comes available.
I'm sorry, both of you were talking at the same time. What was that?
What happened yesterday with that oxygen leak?
There was Elon Musk posted something on X saying that there was a problem with the liquid oxygen leak, that they needed to address that. Again, these sort of things do happen a lot with rocket launches. Not all of them are under as much scrutiny as Starship launches. So it's perhaps I wouldn't say that this is just normal, but I don't think it's unexpected to see that sometimes there are complications that come up at the last minute, whether it's a leak or whether it's bad weather. These things happen a lot.
Yeah, we'll be watching when the next launch is scheduled for. But our Business of Space reporter Bruce Einhorn there with the latest on that strap launch from SpaceX when it comes to the latest Starship rocket. But take a look at how markets are now trading early in the Asian session, because we have seen, of course, Japanese stocks gain ground for the last two sessions. Japanese yen weakening in the overnight session against the U.S. dollar. We had a little bit of a bump in the greenback, given, of course, expectations of that Fed rate cut sort of fading a little bit. You can see the Nikkei now losing 0.6%. But this, of course, at a time when we continue to follow the latest developments in the U.S. as well. And we do have breaking news at the moment. President Trump posting a letter on Truth Social saying that he's removing the Fed Governor Lisa Cook effective immediately. Of course, President Trump had been attacking the Fed for a while, and he had said that he wanted to remove Lisa Cook from the Fed governor role, given allegations of mortgage fraud. President Trump now coming out and saying on a letter on Truth Social that he'll be removing the Fed Governor Lisa Cook effective immediately. We'll get you more details of this as it's coming through the terminal at the moment. But right now, we continue to follow the latest developments on the Asian markets as well. What happens to the Fed, very consequential here across Asia as well, as we do have central bank decisions, including from the Bank of Korea on Thursday. You can see the Kospi now down 0.6%. We had seen gains on Korean stocks as lawmakers were able to pass another corporate governance reform package. So we continue to see the optimism over the Korean markets at a time, April, when we're also digesting the latest from the President Lee Jae-myung and President Trump summit in D.C.
Yeah, I think geopolitics never far from the backdrop when it comes to markets, but just highlighting as well, we are seeing reaction to Trump's post on Truth Social about immediately, effectively, the removal of Lisa Cook. Does this land policymaking a bit more dovish in the U.S.? That dollar reversal, which, of course, from overnight had seen a bit of a recovery. We're seeing the Bloomberg dollar index really sliding at the moment, and including on the Japanese yen, the Aussie currency, the gains are being reflected there. The Australian stock benchmark is flat. Of course, a couple of things we have to unpack in the session, including Fortescue earnings. But just recapping again, we are hearing how Trump citing those mortgage allegations in a letter to the Fed official Lisa Cook, and this is coming against the backdrop of a lot of pressure on Fed officials. We've been talking about Fed independence as a key theme. Trump also saying that they determined that there was sufficient cause to remove Cook from the position. Again, we are seeing the dollar edging lower against this, and gold is also pairing those declines. Let's bring in Kelvin, regional CIO at UBS Global Wealth Management. So, fluid situation, Kelvin, and we're since hearing from the president himself that Lisa Cook could be removed immediately, effective immediately. What is your sense of how this might shape policy making from the Fed?
I mean, clearly, in the next 12 months, we are probably going to see this shift towards a more dovish Federal Reserve, given the fact that the president has actually been trying to undermine what Jerome Powell and the Federal Reserve has actually been doing recently. The confidence on the dollar will certainly come into question if the moves are a bit too pronounced, a bit too aggressive. And I think the appointment of a new Federal Reserve governor before the end of the year, again, if that possibility increases, despite the fact that Jerome Powell will only leave next year, will certainly go some way towards undermining what the Federal Reserve can actually do over the next couple of months. We are of the view that the Federal Reserve will cut rates anyway in September by 25 basis points, given the fact that the labour market has actually slowed down pretty drastically in the last 3 months, right? And we think that the Federal Reserve at this point in time will choose to focus on the growth slowdown, on the weakness of the jobs market, rather than on the risks that potential inflation might actually bring over the next 12 months.
But it's not like they've disregarded their 2% inflation goal, right? So how do you see that panning out towards the end of the year as we still wait to see some form of tariff pass-through? To what extent can the Fed really look past all this?
Yeah. Well, the tariff pass-through is not going to come immediately. We think it's probably going to reflect only towards the end of the fourth quarter or perhaps the first quarter of next year. And the reason for that is because there's several ways that the tariff pass-through can actually come through. Like, for example, importers in the US might actually choose to absorb all these tariffs and actually not pass any of the costs down to the consumers. Or exporters might actually choose to actually absorb tariffs and not pass any of the costs down to the exporters, to the importers, or to the end consumer. Or perhaps there are several other ways of doing it, like, for example, shrinking the products that you have, importing the less high-end models or expensive models so that you only have the lower-end models available for your clients, for your consumers, etc. Those are, in a way, methods that you can actually try to mask the rise of inflation. But nonetheless, we do think that inflation at some point will rear its ugly head, but not to the extent that the Federal Reserve will have to shift its focus from jobs or growth slowdown towards inflation. And in any case, we do think that this rise in inflation, if it comes true, will likely be a one-off and not be a prolonged, sustained increase in prices.
Kelvin, does the expectation of an easier tilt coming from the Federal Reserve signal a weaker U.S. dollar? Or could we see, because of the fiscal policies, because of what President Trump is doing, this exceptionalism in U.S. assets continue?
No, we do think that the dollar is in place for a multi-year slowdown. And the reason for that is because, with the deficit, the fiscal deficit at about 6.5% of GDP and rising, with the fact that your US dollar rates are likely to actually decline as well, we do think that increasingly a lot of the international investors, the sovereign wealth funds, are basically reducing or hedging their exposure to the US dollar. Now, on a short-term basis, you might get spurts of dollar volatility in the sense that you might get the dollar actually rising or appreciating against the other G10 currencies, but we do think that a trend is in place for a multi-year slowdown.
What does that mean for Asian assets? And given, of course, the divergence with U.S. assets and what they're doing, what does that mean for Asia?
Yeah. I think for the Asian currencies, it's a little bit more complicated, largely because I think in the tariff negotiations that a lot of the Asian countries had with the US, the currency negotiations had to be in place as well. Because if I put in a 10% tariff on you and you depreciate your currency by 10%, we're back to square one. So a lot of the Asian central banks are wary of intervening in the markets too aggressively where the currencies are concerned. And that's why on a year-to-date basis, we've seen the Taiwanese dollar appreciate by anywhere between 13.5% to 14%, and most of the Asian export-oriented currencies appreciated depreciating sharply as well. But on the other hand, a lot of the domestically oriented Asian currencies, like for example the rupee, the peso and the rupiah, have not really appreciated sharply against the US dollar. And that's largely because these countries do not rely on exports to actually drive their economies. So we do think that where the Asian currencies are concerned, we are probably likely to see a lot more appreciation from here against the US dollar. But then again, if you bring in the tariff negotiations, if the Chinese tariffs come in at below 30% and in the range of 25% plus, then this China plus one strategy comes into a big question, largely because of the fact that the advantage of diversifying to all these other countries besides China, the advantages are certainly mitigated to a large extent.
We got to talk about the Chinese stock rally as well.
Yeah.
There are some signs of overheating. What is your read on this? Does it have legs?
I think if you look at the rally in the last couple of months as well, the rally has actually been a lot more broad-based and has actually been moving towards the traditional sectors, like, for example, the steel, the cement, and the other sectors. That's largely because of this anti-involution drive that President Xi Jinping announced in July. We do think that is a little bit too, that's been a bit too, has gone a little bit ahead of its fundamentals, largely because we do think that this reform process is likely to be quite different from 2015, 2016, when we had the same issues as well. The economy is a lot weaker now. The property market is in more of a doldrums. And therefore, this anti-involution drive, if it comes true, will likely be seen with a lighter touch. So they will probably curb your excesses on the price competition, but they are not likely to come in and tell you, look, you have to cut production, you cannot increase production beyond a certain amount. We do think that is not likely to be the case, because if you do curb the production capabilities of the manufacturers, the unemployment rate, which is already high, will likely trend higher. So we do think that is a little bit carried away. But on the whole, where MSCI China is concerned, the valuations are still pretty attractive, and we do think that they are still trading at somewhere nearer to its long-term historical average, and certainly not overvalued.
For Chinese tech, I mean, authorities do seem to be perhaps weighing in a little bit more on price setting amidst this anti-involution rally. You're positive on Chinese tech. Does that change the narrative for them in any way?
No, we do like Chinese tech. And actually, I think if you look at the second quarter results, the results of the Chinese tech companies have actually been pretty impressive as well. And that's why we're seeing more of liquidity actually flow into these companies. On top of that, Chinese tech is a big part of MSCI China. So if you do like China, if you want to move towards a neutral or slightly overweight position in China, you do have to buy these tech companies as well. And I think that's where the liquidity is actually flowing into at the moment.
Kelvin Tay, always good to have you with us, Regional CIO at UBS Global Wealth Management. We're watching Nissan at the moment because it's falling by the most since April. Now, this is according to terms seen by Bloomberg. We've learned that Nissan holder Mercedes-Benz Pension Trust is offering about 140 million shares. It currently holds about a 3.8% stake in Nissan and will not be holding any shares upon the closing of the offering. So that sales share really leading to that downside pressure on Nissan, down more than 6% at the moment. We have more ahead on the Asia trade. This is Bloomberg.
And then a developing story. As we know, the U.S. president has, in a Truth Social post, moved to remove the Fed Reserve Governor Lisa Cook from her post at the Fed. And this is in the wake of allegations that she falsified documents on mortgage applications. He said in the post that the American people must be able to have full confidence in the honesty of the members entrusted with setting policy. And of course, we know that the potential removal here could affect policy making at the Fed, and the U.S. president has been trying to influence the majority on the Fed board. So this might nudge things again in that direction for Trump aiming to win a majority on the Fed board. Taking a look as well at how U.S. assets are faring at the moment, an instant reaction to this news that we're getting, the slide in the U.S. dollar extension from a while ago when we first heard the developments, the short end of the U.S. treasuries. That is where you're seeing the climb up about almost 3 basis points move on the U.S. 2-year yield now, and gold is once again catching a bid. And of course, this is a sort of reversal from a day ago. Even U.S. futures are ticking up on stocks. When we saw the Wall Street session panning out, it was interesting as the Fed-induced rally from Friday took a bit of a breather, a bit of a pause, Shery.
Yeah, as you said, that reversal very much coming from the dollar rising the most in more than 3 weeks already last week, as you mentioned, right? So we are now seeing the reversal also in the euro gaining ground. The Japanese yen also up 0.4%. Treasuries gaining, as you mentioned. Yields are down. Of course, this is sort of an expectation of a tilt to the dovish side coming from the Fed. But the situation is pretty challenging, as Chair Powell has put it at Jackson Hole, when you look at the U.S. economy, right? I mean, we do have the Fed's preferred gauge of inflation coming out later this week, which we will be watching closely. But we continue to hear from Fed officials about this concern over inflation. We still have an uncertain picture when it comes to trade. We still have a very strong economy, although we are seeing perhaps a little bit of a sign of a slowdown in the labor market, but perhaps not sufficient enough for policymakers to be very much convinced about the next rate cut to come in September. But this news about Fed Governor Lisa Cook really having immediate market reactions across the board, with the dollar falling, yields also falling, and U.S. futures at the moment really paring back those earlier gains. Let's bring in Enda Curran to discuss what's happening in the markets, given the news about Fed Governor Lisa Cook. How consequential will this be on Fed policy and this removal of the governor?
Well, it's fast-moving, Shery. It's unprecedented. There will, of course, now, I'm sure, be a legal debate over whether or not the president has power to do this, whether or not it is with cause. So you can imagine there will be some legal discussion around it, especially given that Ms. Cook herself has said she would come back with an explanation. But that aside, at face value, it would appear that a governor of the Fed will be removed, giving an opening for President Trump to appoint somebody in Ms. Cook's place. And obviously, given the president's outlook for the economy and his criticism of the Fed, criticism of Chairman Powell, one would assume he'd be wanting somebody in there who shares his view on the economy, would be on the dovish side of things, and will be willing to bring down interest rates. And that, of course, in itself then would spark a whole debate about arm's length operations from the White House, independence of the Fed, and all of that. So, as I say, there's still a legal aspect to all of this. We need to see how that plays out. But at face value, it's potentially significant on the policy side because it gives President Trump an opportunity to appoint somebody new.
And this also follows on from the departure of Adriana Kugler. I wonder what's your assessment of the path of policy making between now and when Fed Chair Jay Powell eventually steps down in the middle of next year?
Well, it's a great question. I mean, events have been moving very fast around the Fed. I mean, President Trump has long been a critic, say, of the Fed, and he's been a critic of Chairman Powell, but in recent weeks he has ratcheted up that criticism, and now that's coinciding with some pretty serious movement on the board, as you say, in the Board of Governors. Already one vacancy has been proposed to be filled, nominated by Stephen Moran. That's due to go before the Senate at some point. So he's coming out of the White House. Clearly, he will be sharing a similar worldview to President Trump. Then, of course, we'll have to see how this particular issue plays out with Ms. Cook's seat on the board. But again, if that happens, that's a seat that President Trump can fill. And of course, heading into next year, then Chairman Powell's term as chair is up in May. Obviously, we know that process is on the way to replace him. Those interviews are supposed to be kicking off in the weeks and months ahead. Expect to be a new governor announced. So there's no doubt that President Trump has an opportunity to shape this board. It then becomes a very contentious debate over how will it be shaped. Is it being shaped with a very particular political bent, or is it being shaped by from a neutral standpoint with the best people for the job? And that's where the raging debate is right now, and that's where the concerns are around the Fed's independence from the White House.
And then let's talk a little bit about independence, because how much of a risk is it for broader global central bank independence? As we just wrapped up Jackson Hole as well, this issue was front and center.
Yeah, I think you could think about it as a domino effect. The Fed is the world's biggest central bank, the most powerful central bank. It influences policy all around the world. So, the thinking would go that if the Fed independence from the political process is diminished, then the concern will be that other governments around the world will take the lead from that and start to bring their own central banks to heel as well. Now, to be clear, the Fed is not independent from Congress. There is an accountability mechanism there whereby Congress ultimately oversees the Fed. But operationally, it is independent, and if that decision-making process comes under threat, that will certainly spark, I think, a global debate.
Bloomberg Global Economy correspondent Enda Curran there with breaking news at the moment, with President Trump ousting the Fed Governor Lisa Cook. This is Bloomberg.
And of course, we continue to track the market reaction to Trump's post of Lisa Cook, the Fed official, effective immediately being removed. We are seeing that risk-off continue in the Asia session. Japan, South Korea stocks are down at the moment. Where we are seeing a pickup is in those U.S. short-end treasuries. This is Bloomberg.
Assets moving at the moment on news that President Trump is ousting Fed Governor Lisa Cook on fraud allegations. So we have the dollar down, yields down, U.S. futures down, and you can see on the other side of that trade, the Japanese yen gaining ground, the euro also a little bit higher. Nikkei futures down, Nikkei stocks down 0.7%. We're also watching some individual stocks across South Korea coming off the President Yi and Trump summit. Of course, we have heard that Korean Air will be buying more than 100 next-generation aircraft from Boeing as well. But when it comes to the overall trade agreement, President Trump refusing to change the terms of South Korea's tariff deal despite lobbying from President Lee Jae-myung during their first in-person meeting. After talks at the White House, the two leaders did agree to cooperate on security issues and shipbuilding.
We're going to be buying ships from South Korea, but we're also going to have them make ships here with our people, using our people. And we're going to go back into the shipbuilding business again.
Our chief North Asia correspondent Stephen Engel joins us now with more on this summit. And Steve, of course, it was very high stakes for President Lee Jae-myung. How well did he do?
I think he did pretty well as far as the outcome, because it was setting up to be fairly confrontational. On Truth Social, the President Trump, that is, had made comments about the political unrest in South Korea, about raids on churches. And of course, there had been rumblings in Washington that the Trump administration was not necessarily happy with that late July tariff agreement, thinking that maybe the South Koreans got the better end of the bargain. So maybe this was just a bunch of posturing ahead of talks in the White House. But, President Lee from South Korea came in with pretty much a charm offensive. He praised Trump for the stock market gains in the United States. He praised Trump's peacemaking efforts. He even praised the golden touches in the Oval Office that Donald Trump has implemented. So that was clearly a tactic from the South Korean delegation coming into this very critical meeting. He didn't get what he wanted, though. He did urge Donald Trump to kind of rethink that 15% tariff rate that was down from 25%. But essentially, Donald Trump said, we stuck to our guns, and that tariff agreement will stay in place. Yes, they did talk about a number of security issues. The Trump administration has been upset with the level of money that the Koreans pay pay for the U.S. troops, 28,000 plus on the Korean Peninsula. They've both agreed to modernize their security alliance. There were some business deals as well. You mentioned that Korean airline deal for Boeing jets, 103 jets, including 777-9s, 787-10s, some 737s, as well as some 777 freighters. So going forward, shipbuilding will be a focus of this alliance or this relationship. And also, of course, North Korea is going to be front and center going forward.
Yeah, Steve, certainly. And we actually heard from the South Korean president sort of weighing in on the North Korean issue. Take a listen.
I hope that you will usher in a new era of peace on the Korean Peninsula. Resolving this issue through my engagement is not an easy thing. And the only person that can make progress on this issue is you, Mr. President. If you become the peacemaker, then I will assist you by being a pacemaker.
Lee Chae-myung there talking about how it's not an easy issue. But, Steve, are we looking for another Trump-Kim summit here?
Well, if it's going to happen between the United States and North Korea, it's going to happen under a Trump administration because, again, Donald Trump has been using flattery towards Kim Jong-un, saying they became very friendly over their 3 meetings in Trump's first term. He says he's willing to meet again with Kim Jong-un, but Kim Jong-un has been emboldened by the Russian war in Ukraine. That defense relationship with Moscow has emboldened him. He has not backed down on his quest for nuclear weapons and expanding his nuclear arsenal. So we'll have to see. I wouldn't be surprised if there was another meeting, at least in the works. President Yi suggested that Trump could even, if he made peace on the Korean Peninsula, he could build a Trump Tower and even play golf in North Korea. I think that's getting a little lighthearted, given the seriousness, obviously, of the nuclear ambitions of the North Koreans. But it is something that we'll be watching for in the coming months, if not next year.
Steve, thank you so much for providing that context for us against the backdrop of this high-stakes meeting between the U.S. and South Korean leaders. And as Steve was talking, we actually have been getting some lines from the U.S. president, and he is threatening to place export restrictions on chips, also threatening and institute export restrictions over digital tax. On top of that, additional tariffs over digital taxes. And of course, we know how he's also spoken about standing up to countries that attack what he calls our incredible American technology. So again, here, seeing how Trump is threatening export restrictions, and this is over chips, as well as tariffs over digital taxes. And of course, this is coming against the backdrop of the South Korea-U.S. meeting. We didn't actually get that much more clarity when it comes to the chip supply chain from the U.S. into South Korea, Shery.
Yeah, so we are trying to figure out what the digital taxes will mean, right? I mean, President Trump is talking about these countries that are applying digital taxes. We know from reports that the administration was considering sanctions on European Union or member state officials that were implementing this Digital Services Act. But we also know that the digital taxes are implemented by other countries like Canada, India as well. So we'll continue to watch what President Trump means when it comes to these export restrictions on chips. Of course, very consequential on that tech rivalry with China as well. But as you mentioned, Avril, President Trump wanting to stand up for countries that attack, supposedly, American tech companies. But we will watch the tech sector very closely in the Asia market session. We know that right now trading is all in the red. We had also more news coming from the Trump administration on the dismissal of Fed Governor Lisa Cook. So we have seen the risk-off sentiment spread across the board, Avril.
Indeed, and you just talked there about this tech rivalry between the U.S. and China. In spite of that and the geopolitical backdrop, we have been seeing, really remarkably, this stock rally on the mainland, and it is rolling on with the blue chip CSI 300 index up 9% this month. But concerns linger over a repeat of 2015, when a rally was followed by a crash that sent the index tumbling 47%. Bloomberg opinion columnist Shuli Ren believes we're not in for a repeat, and she joins us now from Hong Kong. So Shuli, why not? Why are we not going to see a repeat?
So 2015 was clearly a liquidity-driven rally. At the end of 2014, the PBOC cut interest rates, and the people had a lot of money, and they flooded all that money into the stock market. But this time around, it's quite different. The macroeconomic backdrop is similar, but if you really see the China's stock rally, it happened last week, and I would say that it was a beneficiary of the U.S.-China tech rivalry. What happened last week was DeepSeek upgraded their V3 model to cater to homegrown chip manufacturers. And then there's news reports saying that NVIDIA was halting production of the H20 chip because the Chinese government said that they have national security concerns and they didn't want the tech companies to buy them. As a result, what you are seeing is a huge rally in the AI infrastructure stocks. Some of the names like Cambricon and the Haigang, they were up 20% by Friday, right? Just one day alone. And I think that in this sense, it's quite different because we do have excess liquidity in the market, but we also have a real catalyst, basically the notion that China can find its own in NVIDIA.
So, still room to run for Chinese stocks, or is it a bit too late to jump in given the rally already?
That's a good question. I think with China's bull market, you can never have a slow bull like what the government wants. Because of a lot of retail participation, it has to be a fast rally. But having said that, what we are seeing right now is nothing like 2015. Margin trading accounts for maybe 10-15% of average daily trading volume. And in 2015, it was like 30%. Also, I would say that the China A-shares is just playing catch-up, right? The Hong Kong stocks, they're up like 28% because of the DeepSeek enthusiasm. And then now the CSI 300 is up about 15% for the year, and I think it's playing a catch-up.
Bloomberg opinion columnist Shuli Ren there as we head towards the China market opens. Great to have you with us. We do have more ahead. This is Bloomberg. Australian iron ore miner Fortescue has reported a 41% drop in full-year net profit against a backdrop of sluggish Chinese steel demand and falling iron prices. Bloomberg's Paul Allen joins us now with more on this. And Paul, not such great numbers, but were there other key takeaways and perhaps even bright spots?
Well, for Fortescue, I mean, its only product is iron ore at the moment, and its biggest customer is China by far. So it's uniquely exposed to what goes on in that market, and we're seeing that reflected in the headline numbers. As you say, a huge drop in net profit. $3.37 billion was the takeaway, but the dividend suffered as well. That's down about 30%, and Fortescue paying its lowest dividend in about 7 years. So Fortescue did reduce costs. It did have record iron ore shipments, but none of that was enough to offset the weaker iron ore price. And I mentioned Fortescue is trying to diversify. It's getting into energy, into hydrogen as well, and it's made some huge investments there, about $3 billion over the past 4 years or so, but so far no return on that investment. We did hear from the Fortescue Energy CEO Gus Pichot. He says green energy, green hydrogen does remain key to the future, but for now the results not too good, and we're seeing that reflected in the share price today. Fortescue's off about 2.5% at the moment.
And we're getting towards the end of earnings season in Australia, of course. What have the results looked like so far?
Yeah, well, not bad, but then again, expectations were somewhat giddy heading into this, and valuations were pretty high as well. If we take a look at some of the case studies from this Commonwealth Bank, it's the largest company by far on the index, makes up about 10% of the ASX index by weight. I mean, cash profit did meet expectations there, but analysts didn't like the outlook, especially in a falling rate environment, and it dropped 6% on the day, and it's still about 4% down from where it was 2 weeks ago. Now, CSL is another market darling. That underperformed in a couple of key sectors and saw its steepest ever share price drop. So companies that miss are getting punished very badly. Guzman and Gomez, the Mexican fast food chain, got punished. The building supplies manufacturer, James Haidi, got hit as well. But to give you some context, and we'll get some more on this in a moment, the ASX has been at record highs, so anything less than a stellar performance does tend to get punished. So for a little bit more on that, let's get to our guest, Elfreda Jonker, Client Portfolio Manager and Investment Specialist at Alphinity Investment Management. And Elfreda, thanks for coming in.
Pleasure, Paul.
And I do want to start on that point. I mean, the market is just so unforgiving when it comes to misses. Is that because the results have been disappointing, or the expectations have just been so high?
Yes, I think it's probably a bit of a combination of two. And if you look at the overall market level, it's now trading at a price to earnings ratio of 20 times forward, relative to the long-term average of 15. So what the valuation tells you is really just the amount of risk that you take when you enter into a position currently. So expectations coming in have been very high, particularly for stocks like a CBA that you've mentioned. So there's just not a lot of appetite for any company that's either going to miss a little bit or guide lower than what the market expected. So that's why you've seen those big moves, and it's very similar to what we've seen in the global earnings season, actually. A lot of big daily moves on that side as well.
Well, we do have the index hovering around record highs. So when you put together what you've just described, does that suggest that a correction is on the horizon?
It definitely feels like we're at the point where we need to see earnings growth come through. I think if you look at the current expectations, the market is expecting now another negative 2 to 3% for 2025. And that would be the third year of negative earnings growth for the Australian market. If you compare it to other markets where we still see strong earnings upgrades, it does pose the question, you know, why would you want to be in Australia if you can get earnings growth elsewhere, and why do you pay up for it here? We don't want to make an overarching call on the market direction. What we are doing is to go bottom up and really look for those idiosyncratic earnings stories, rather than trying to call the market overall or any specific sector for that matter.
What are some of the idiosyncratic stories that you like at the moment, especially when it comes to different sectors in the Australian economy, and perhaps some of that influence also coming from Chinese demand as well?
Yeah, so currently we are actually quite underweight the miners. I think if you look at that sort of Fortescue results that you've just mentioned, we are not necessarily convinced yet that we've seen enough demand-supply fundamentals improve to dramatically increase our materials section. So where we are still positioned quite a bit is in some of the insurance companies, particularly those focused on domestic, like a Suncorp. But we are acknowledging that we're probably at the end of that sort of pricing increase cycle for insurance. Two standout companies that I can mention, just looking at other sectors. So within the technology sector, we really like Technology One. They continue to come through with really strong results, really strong products and new innovation coming through, with additional growth angles, particularly in the UK, in councils and education. So something like a Technology One for us is still one where we expect to see earnings growth, and particularly positive earnings revisions, which is what we look at. And then in the healthcare space, another example would be ResMed. The healthcare sector has been in a world of pain this year globally, but ResMed is one of those companies that continue to do really well because they have very strong balance sheet. They can continue to not just give us additional buybacks as well as dividends, but they actually have a fantastic product pipeline where they can still gain market share. So it's companies like that that we continue to see potential upside in.
Are you factoring in another potential 25 basis point rate cut from the Reserve Bank? And how would that change your thinking of asset allocation at the moment?
Yeah, I think we definitely are probably of the opinion that if you look at the overall market, what the market's expecting is another 1 to 2%, 1 to 2 interest rate cuts over the next 12 months. And for us, all the indications are there that we probably should expect interest rates to go lower from here. One area that we are specifically looking at and where we have been quite underweight has been the consumer. And that is where we're starting to see a few green shoots picking up, not just from a macro perspective, but also from the recent results. So that is one area where we would be increasing our exposure, where consumers can benefit from that lower interest rate outlook going forward.
As we head into this lower interest rate environment, how does that influence your view around financials as well? Because we might see some pressure on net interest margins. What do you like there?
Yeah, I think generally speaking, we've actually had quite a bit of exposure in the banks over the last sort of 12 to 18 months, and it's really helped us a lot, and it's because they've had the positive earnings revisions. We continue to see that, and as a result, we're still there, but we have been reducing, and we are underweight the banks. We are selectively positioned in NAB and Westpac as our two preferred, with CBA, a fantastic company, but very expensive. So we continue to sort of reduce those positions in banks as well as insurance with the outlook of lower rates ahead, and rather moving towards sectors such as real estate that can benefit from the lower rates.
All right, Elfreda, thanks so much for joining us today. That is Elfreda Jonker, client and portfolio manager and investment specialist at Alphinity Investment Management. Shery.
And Paul, of course, we have plenty more to come. We're actually speaking with Fortescue CEO about the company's results and demand in China that's coming up in the China show at the times shown on your screen. We also have more on Australia ahead every Tuesday at 10:40 a.m. if you're watching in Sydney, 8:40 a.m. in Hong Kong. And you can tune into the Bloomberg Australia podcast, which delves into the biggest stories shaping the country's role in global business. Find it on Apple, Spotify, or Bloomberg.com. We have more ahead on the Asia trade. This is Bloomberg.
And of course, the developments we've been tracking this hour relate to Trump's post on Truth Social of the immediate removal of Fed official Lisa Cook. And we've been seeing how this has really been expressed across assets, mostly in currencies, and we're seeing some of that in bonds as well. But take a look at what we're seeing in Asia stocks, 1.3% down on the Japanese benchmark, extending the losses from the start of trade. And South Korea, even with the South Korean president visiting the U.S. and a positive tone coming out from the meeting with his U.S. counterpart, this is where we are on the South Korean gauge. And Shery, is really interesting to see how the dollar potentially could come under pressure in two ways. If Fed independence gets undermined, that turns the focus from overseas investors. Obviously, we also have potentially, if there is a dovish tilt to come from the Fed board, might that put the dollar under further pressure? For now, certainly it doesn't look like investors are discriminating in how they express the selling of the dollar.
We're watching the tech sector very closely as well, right? Because President Trump now saying that he will stand up to countries that attack American tech companies. He's put countries with digital taxes on notice and threatened export restrictions and tariffs over those digital taxes. So that's really adding another layer of risk-off sentiment across the board in the Asia trading session. So you mentioned how the dollar really reversed those gains that we saw in the previous session and is now under pressure. U.S. futures are under pressure. Yields are under pressure. And you can see on the other side of that trade, you have the Japanese yen gaining ground towards that 147 level against the US dollar. Even the euro seeing a little bit of a pop right there, and the offshore yuan also seeing strength. The offshore yuan actually has seen significant strength in the past session as well. This, of course, as we've heard from Shanghai, they're easing home buying rules, and Chinese stocks have really jumped across the board on optimism about the market rally continuing in China, Avril.
Yeah, aside from China, you raise a really good point about how global market sentiment can quickly turn. We're getting another reminder of that with Trump talking about potentially placing export curbs on chips. But in terms of bonds, we are seeing treasuries catching a bit. Japan's 10-year also ticking higher. That's it for now from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shenzhen, and Shanghai. Keep it here with us. This is Bloomberg.